Hi and welcome to the Market Alert for Tuesday the 18th of January 2022. So Friday, even though we've got a quiet news this week apart from the UK CPI, we've got 125 billion potential volatility spike when we see Friday's quadruple witching in the futures, options, Stockholm futures, etc. As they expire. This Friday, January 21st, deep in the money calls worth billions of dollars are set to expire. Deep in the money calls are unique because they are valued as being essentially equivalent to shares of stocks. So if you've got a deep in the money option that's expiring, you've actually got to offload it or swap it for the underlying instrument. So Friday will be very interesting on this basis for sure. So we'll keep an eye on that on Friday. And what other news have we got? No, that's it. I've added back in the implied volatility after requests. And you can see that we've been sideways for the last couple of weeks, been really quiet on the volatility front, which is why when we've been getting signals and the market's moved, it hasn't had the follow through because the volatility is not significant, as can be seen here by the implied volatility. And that's why in this article here, this could really kick off volatility on Friday. We've also got the UK CPI numbers, haven't we, tomorrow? But today, let's have a look. All medium impact there, nothing jumping out at me. So let's just switch to tomorrow. Yeah, UK CPI numbers will be interesting as well because there's a drop off in volatility and the metals sideways as well. So let's have a look at the Dow for yesterday. There wasn't a lot happening. This is the daily chart. You can see really quiet, a bit of a test there, low volume market starting to make its way back, stuck at 78.89 overnight, and the 50 bar moving average, and got some divergence there as well. But sideways overnight, bit of a shakeout. You can see that down 150 points. Straight down overnight there. There's that, yeah, that's right, it is 150 points. And the market stopping at the low. Well, what a surprise there. You can see them buying back into the market here. We've got a crossover in the stochastics now, and at that low. Very important that we hold this low, because if we don't, then we're going to continue down, as you can see in the daily chart, to the 89, the low of Friday's low, which was also a double bottom there as well. If that's taken out, then we go to 62, 78, 89 and the 200 MA there. On the upside, if prices do find support, we're looking in this direction. The market obviously overnight stopping at 38%, which we can see, and then being moved to the downside. And then we've got the other fib retracements on the upside should prices manage to change direction off this low where it's currently got support and continue to move to the upside. In the 30-minute, you'll need to see prices close above the two averages, the 20, the 50 and the DP, to get anywhere near moving back to the upside there. 924 is the DP, and 924 is in the 38% retracement area, which needs to be taken out there and moved to the upside. And in the German DAX, similar picture. Again, you can see overnight it's been moved lower down to Monday's low, exactly the same. You've got your demand coming in there, holding prices at the moment currently sideways. Again, very important that we hold the low here. In the daily chart of the German DAX, again you can see the same as the Dow, very quiet yesterday, sideways, and sitting at that sort of 62% area. Very important it holds at the moment. It's currently below the 5 bar moving average and the 20 bar, so it's important it holds at 62 there. Again, on the upside, you do exactly the same from this high to this low, and we can get rid of the 38 at the moment. So you can see how narrow it's come, and the volatility has dropped off markedly over the last couple of days, which is surprising given that Friday was a big news day for the US, but it is what it is. It's they've sort of left the party at the moment. It's very quiet, isn't it, when you consider the levels of volatility we've had over the last few weeks, and now all of a sudden it's not there. It's dropped off markedly. Let's have a look at the metals markets and see where we are. There we go. Also in the metals markets, very quiet. Yesterday silver being held sideways, still struggling to hold above this $23 an ounce. It's got the 89% retracement in the way which the market traded to yesterday, and then found resistance overnight as well. Managed to move the market sharply lower overnight, as you can see there, Asia, but we are oversold and down to the S1. Not quite down to the low of Monday, but there's a bit of demand now. Need to get back above the daily pivot in order to move higher. In gold, just the same, stuck in the sideways range, and the dollar also moving back to the upside there, putting a bit of pressure on the metals markets. And crude oil continuing to move higher as well, currently trading back in the highs there, and also in the weekly chart. You can see that we've taken out the resistance to the left there, which would have been $86 per barrel. So we're heading up to that $100 per barrel level, as if we haven't got enough problems with inflation and fuel increases. We're starting to see this moving to the upside. When was the last time we were at this sort of level? Was November 18 is where we were before. So we're starting to make some progress to the upside there, taking out some multi-year highs as the market does it. We've got a bit to go yet before we get to this level, which is back in October 2014. So that was the last time we saw prices at $87 per barrel, according to the weekly chart there. So that's it for today. Like I say, it was really quiet yesterday, nothing happening at all really, and today things should be getting back a bit more to normal. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.